What is going on, YouTube? It's Brendan for Market Makers. Guys, we are on the precipice of a potential CPI rally, little impulsive move up to make our top, and then I believe further dissension down, making new lows, as you guys know, based on Dante's descent, based on the cycles of the market, looking specifically at super bubble cycles married to the equinox dates. You guys have seen it all on this channel. We gave you the big trades all along in this descent, and it's no surprise where price is at right now, because price went all the way down to what? Less than 15.5, 15.481, and we got up to 17.4, all part of Dante's descent pattern. If we look at our dates, guys, I want to juxtapose what I'm saying to Mike Wilson, okay? Mike Wilson, for any of you that watch CNBC, specifically in this country, the USA, he won some TA award last year as being the best TA person on Wall Street. And he has a couple of things that he said that I agree with and then adamantly disagree with. So he has the market coming down, of course, for the spring equinox. He doesn't say the spring equinox, but in March to early April. And he has the S&P coming down to 3,000. But all of that I agree with. I have my target actually at 3150. But the difference is, because of where he works at Morgan Stanley. They don't have a deep recession prediction. They have a short and shallow recession prediction. So he thinks that's the bottom. And I want to explain something to you how this works, guys, with TV, and it translates into YouTube as well, especially some of these bigger characters on YouTube. But the way that this works is like this, because you saw this in '08, we saw this in 2000. Other than the people that accurately predicted it, like Michael Burry, Jeremy Grantham, Ray Dalio, Scott Minerd, those guys, Scott Minerd just passed away recently. Other than the people that accurately predicted it, what will happen is this. Let me tell you what Mike Wilson's going to do. The S&P is going to come down to a target. Could be my 3150, could be his 3000 target in March, and then we're going to have a big rally. And then we're going to sell off again and go to make new lows going into the autumn equinox. And at that point, you'll hear things, commentators on TV, the talking heads say things like, well, nobody could have predicted this. Nobody knew this would happen. Nobody knew XYZ would be a catalyst in the market to make this happen. But that's because they don't look at the overall cycle. Cycles repeat themselves over and over again. That is why the 1929 crash broke the same way the dot-com crash did, broke the same way the GFC did. So you see this over and over again, how these markets behave in these super bubble cycles. The problem is, if you have normalcy bias and you don't even understand that we are trading in a bubble, if you don't even understand that premise and you only view it as, well, job growth is still really strong, I think we're going to have a short recession, a shallow recession. The second problem is where Mike Wilson works, okay? And I think Mike Wilson seems like a really nice guy on TV, by the way, and he seems like an honest guy. But he works at a bank. He works at an investment bank. So maybe Mike really does know what's going to happen, right? Maybe he really thinks, I have to say this, because if I go out and say, hey guys, the S&P is going to 1855, like Brendan from Market Makers thinks, then who's going to invest? Right? Who's going to invest? Who's going to buy anything knowing they could just wait for a much cheaper price if everything did collapse? Remember, we have those two different targets we looked at. If you watch my video I did on equity space, because it directly ties to Bitcoin, as well as my harmonic decay video, guys, they're on my YouTube. I'll put them in a playlist. I keep forgetting to do it. I'll put them in a playlist, but it's within the last 10 to 14 days. If you look at the thumbnails, you can get all the targets, because the way that's going to play out, we're going to come down in that spring equinox right here on my screen, weekly time frame. It's actually March 20th, 2023. Could be the week before, could be the week after. It doesn't have to be that day, but we always find these bottoms and tops in the autumn and spring equinoxes. Okay, so that's our first big pull down, and you're going to see all the big characters on TV readjust their positions after the next rally fades, after more earnings come out, after the recession kicks into high gear. year. Then they'll all revise everything. Well, based on the new data, I believe we have to be really fluid in our projections. That's the difference of forecasting accurately and being reactive to the market. But I do agree with his first premise for this part of his forecast, which is, the markets are coming down in March and April. I mean, I could have told you that 10 years ago that if we were going to have a crash, the markets would come down in March or April or September, October, because that's what they do over and over again, as you guys know, watching this channel. All right, so let's keep moving. All right, guys, weekly time frame Bitcoin. Going to look at Bitcoin, going to look at the equities, and we're going to go over gold and silver because silver's setting up really nice for a trade, guys. So I want to show you that. So let's set the table real quick again. Powell gave a speech today in Sweden. He didn't really talk about the markets, basically a nothing burger, basically repeated everything he said multiple times in other speeches. However, Bostic and some other Fed heads came out, I think yesterday and the day before. They all said 5% rates, higher, longer, not going to cut, all for 2023. Market still doesn't believe them. Market still thinks they're going to cut. So that's where we're at in the marketplace, guys. But the CPI report is coming out Thursday, 8:30 a.m. Eastern time, projected to be 6.5%. Okay, 6.5%. If it comes in at 6.5% or lower, look for the markets to get another pop up. Okay, very key here, because if the markets pop up, got to look at the resistance, and that will allow Bitcoin hopefully to move up and at least hit my base level target there at 18,411. Okay, so that's the next 48 hours essentially of trading, not doing anything, waiting until the CPI. And conversely, obviously, if the CPI comes in hotter, comes in at say 6.9, 6.7, 6.8, the market's just going to dump. Okay. So that's where we're at, guys. But I think this will be the last rally, however long it lasts. Could only last that day. Could have a big wick up, wick down, just like we did last time. Or it could go for a couple days into early next week. We'll see how it plays out. We don't know because we have no candles, right? We don't know what the number is. It's going to be a surprise, at least to those of us that don't get leaked the Fed information. So looking at this, guys, harmonic symmetry is so important in the marketplace. To show you how harmonic this decline is on the weekly time frame for Bitcoin, 5-wave pattern, looking for that 5th touch on this candle, then I believe we are descending. So long, see ya. Okay, this is what we're looking at here. I can show you this with an X5 pattern, show you how harmonic this pattern would be. Let me go ahead and just put this here, turn the magnet off, and get to look at this. Spot 443 for your first wave here, okay? Your A, your B, your C. Spot 443, X to B, and then, or X to, X to B, and then B to D, spot 444. This is a very harmonic, symmetrical move. The market tends to move with symmetry, and I want to show you this. This is a key concept in geometric trading, okay? So again, looking for that wave 5 touch, could come up above it, but looking for that wave 5 touch before the descension. And let's go ahead and click forward. Here's another thing to watch, okay? So we have my chameleon vibration. Another way to visualize this. Here's your 100% move for market symmetry, your A equals C. Or if you're looking at Gartley's book on page 249, this is your AB equals CD, okay? This is where you would be looking at that, 19,198. You guys have seen these numbers, and you look at the ratios, 486, 618, X to D. Very, very harmonic pattern here, 61.8% retracement from this wave. And guys, something to pay attention to. On the weekly time frame, you do have your 50 coming down to cross your 200 on the weekly time frame, which would be a death cross on the weekly time frame. Okay, again, just go back in history, weekly death crosses. The idea that we're going to rally. I saw Tim Draper, who's a billionaire venture capitalist. Of course, last year he had a prediction of Bitcoin 250K by the end of 2022. Again, clearly doesn't know market cycles. Now he's updated his 250K prediction to June, July of 2023. Well, he really needs to start studying some charts if he thinks you're going to 250K in the next 5 or 6 months. Just not going to happen, guys. Lots of hopium still in the marketplace. Got to understand the cycle you're trading in. Looking at this, another way to look at this on the weekly time frame, again, harmonic decay, spot 5 ratio here, A to C, expansion ratio of 2, brings us to our target. If we come back up and back test our weekly 1 spot 272 at 18,411, looking for that decline by the spring equinox of 12,747 on the 1 spot 414. Okay, could it go deeper? Yes, it could. Especially if the market sells off really hard, you get the VIX spiking up above 50 or something. This could go deeper. This could go to 10K. Remember, we had that 10.5 target forever until we had more candles. So we had that 10.5 target. If you guys watch my harmonic decay video, you'll see all the different Bitcoin targets. But I still think unless we have a massive, massive capitulation event in the marketplace, your second bottom will be your true bottom, and that will be in September. Well, for Bitcoin, actually, we have it on the pattern late August, early September. So that's what I'm seeing here. But, again, lots of things could happen that really drop this even more. So we'll see how it plays out. But the important thing is your entry. That's what I'm looking at. So when people want to debate me, I don't see 12.7. I see 13.5, or I see 10.8, or I see 11.5. That's great. I honestly don't care where this goes. I care about getting in the trade up here as a trader, okay? This is what I care about. If it goes deeper than my target, fantastic. I mean, how would I not be happy about that? Goes shallower? Fine, it's a trade. But again, guys, I see, economic events unfolding, and I think it's going to take longer throughout the course of the year to really have that recession hit home. I think it's going to be a progression, which is why I think March, and remember this March date is only 2 months away. So it's not that far away, guys. I just don't think there's enough economic damage at that point to have a true bottom in the marketplace. And if you don't have a true bottom in the equities, you're not going to have a true bottom in crypto. Remember, the markets have never bottomed ahead of a recession, and we just had a positive GDP growth. So there goes your 2 quarters of negative GDP, then you had positive GDP. So this is really important to understand, because if the markets have never bottomed while the Fed's raising rates, the markets have never bottomed with inflation above 5%, and we put all these factors together, guys, it just tells you there's going to be big rallies and there's going to be big moves down. And I think March is too soon for the true bottom, and I think all those Wall Street analysts like Mike Wilson will have to update their projections. Let's keep going forward. Of course, looking at the market makers Caterpillar, guys, Caterpillar just starting to expand, the tightest contraction, and look what happened here on our daily pivot. That's when you got the uprise, guys. You got the uprise off of the daily pivots. Remember, my thesis is a wave up, then wave down. The key is, can we wave up to at least hit one of my targets that I want to hit? We're going to look at that on the daily time frame as well. But this contraction pattern, very, very tight, guys. The tightest since the beginning of the bull run. And again, for reference, right here, 18% up move, 28% drop, and this is much tighter than this was ever. Okay, so this is going to be really interesting to watch. Our VWAP, volume weighted average price, right about on a 144-day trend, right about 18.5, which is literally where we need to get to. Okay, where we need to get to complete that channel pattern. But I really, 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 as you guys know, want to see this, and I think this is likely. I think if that CPI comes in at 6.5 or better, I think that's the catalyst Bitcoin needs to move. I think it's the catalyst the markets need to move to re-challenge their 200s again. And I think you're going to wave up, volume weighted average price right there, the 18.9 coming in this trend for the last 6 months here. Look at your 200, guys. You haven't touched it since 48.2. It's at 19.5. This would just be absolutely beautiful to come up here, hit the 1 fib, market symmetry, 19,153, get some scam wicks or overspill, hit your 200, haven't touched it since 48.2, build your top, and just start descending from here. This is my holy grail trade if we can get up there, and I think we can get up there. Let's look at some key indicators though to see what's happening here. Okay, so again, we have my chameleon vibration, the 618 retracement from X to D, beautiful 486. 1436, your Kepler number, 1414 from B to D. This is just a harmonic landing spot here for a vibration reversal. If we open this up, look at the money flow marching up towards overbought. This is going to line up beautifully, looking at the volume momentum, getting some volume momentum here. But overall, what you want to see on the volume, which is playing out beautifully as well, X to A leg. Look at this. You have your volume spike up. You got a 2 sigma candle here on the X to A leg, and then volume down left to right. Okay, volume down left to right as price rises. This allows you to have volume divergence and build some sort of top at peak resistance to fall down. I think I was drawing like a Bart Simpson pattern there, but allows you to build a top. So this is what I'm looking at here. Keep the volume down left to right. Let the money flow start maxing out. Let price keep rising. I hope we get past that 18,411 and get to this target, because this will just be a high probability short, in my opinion. Guys, you want to trade the cryptos, check out BITGET and support our channel. The link is in the video description. And if you want to trade these equities, commodities, including the metals that I'm about to show you, then definitely check out SimpleFX, link in the video description with the exclusive bonus. Guys, using our links helps support the channel, and I really do appreciate it, so I can continue to bring you all this fun content. And let's go ahead and move forward. Looking at this another way on the daily time frame, again, looking at the money flow, look at this. This is just beautiful, beautiful. And exiting our mini cough structure. You see that? I have a multi-layered Wyckoff here, okay? We have the 5 and 21, do a bullish cross here, price moving up, and here's our mini cough structure. We're basing on the top of it, looking for a pivot out, hoping to get that 19.5 target and click that 200. Okay, it will be absolutely gorgeous if we can do that. And let's go ahead and move forward. S&P, guys, S&P. I want to show you a different way to look at the markets today, because a lot of people are looking at double bottom structures and whatnot, and what I'm seeing could easily be something different. If you look at the S&P weekly 50, that's about 40.50, okay, 40.46, the weekly 50. It's been your ceiling, okay? There's your 200. Again, coming for that death cross eventually here in the S&P. But the Earth perigee date, guys, S&P January 4th, 2022 made its all-time high and then sold off. Earth perigee day, January 3rd. Earth perigee day was on the anniversary, January 4th. S&P right now on this candle, again, this could be the weekly candle that starts the sell-off, or next week. And when you start looking at this in the smaller time frames, guys, the difference here is you're making what could be, if you come back up and move and get that projection, get that low CPI and come back up, try to test that weekly 50 again. What did you just do? You just made a double top. You see that? You made a double top, and that's going to be your dissension target here, or your dissension pattern here. You make a double top if the CPI causes you to pump back up and fail again, right? So oftentimes you've seen it's just been a clear move up, move down, right? Clear move up, move down. I guess you could call this a disjointed double top. But if you can move back up to that 40-50 area, which the S&P's at 3,900, you could do it, right? Even if you don't have to get up to that level, but I'm just saying the higher you get to that resistance, key resistance, the more likely it is that you fail. And you can see this here on the daily time frame as well. We have our mini cough structure. This is what the S&P wants to do. Yesterday it pumped up, tried to get to the 200 and failed, fell back below the 50, trying to hold this level on Wyckoff. Why is that important? Because again, with this CPI print, guys, we could pump back up. Your 200 is right here. You see how close your 200 is on the daily? 39.74. So really, again, this is just, to me, this just looks like, to me, I know I've showed you this, okay? I've showed you this pattern, how this can be, you know, a Gartley pattern, or the basis, a W pattern for a bullish pattern. And I totally get that. I've showed this to you. So this is Gartley's pattern, essentially. Now there's a bunch of different harmonics based on this type of pattern, including my chameleon vibration. But I think what you're actually doing here is going to print a double top, okay? This is what I think you're going to do. You're going to rise up, come come down just like this and potentially come up and try to hit your 200 again and then come down. And that's the move that you're actually doing. Very similar to this move, okay? That's how I think this is going to play out. And we'll see that with the CPI. The CPI does come in lower. Watch for this to come up. And you can see you had that nice scam wick there to the 618 at 41.40. So I think you get to at least the 4,000, obviously, and potentially that 486 here at about 40.50, 40.60, and that's going to paint you a beautiful double top to top out on and then begin your dissension, okay? That's what we're looking at. And let's go ahead and look at, let's see what the money flow and everything's doing on the S&P. Money flow is pumping up, moving towards overbought as well. Just something else to watch. Your volume momentum has definitely dropped off. So more things to watch. Again, got to watch the euphoria with the CPI. So the weekly time frame on the Russell. Weekly time frame on the Russell. Again, Dante's descent, guys. Last week was our pivot bar, meaning this bar should finish out red, okay? Because just like before, you can pump up on the pivot bar and then come back down. But this bar should finish out red, and if it doesn't start till next week, it doesn't start till next week. What really matters, again, is trading it, right? And again, just like with the S&P, guys, if we do get upward momentum with a low CPI, I'm really just looking at a double top formation here, okay? And let's go ahead and look at this on the weekly with all of our moving averages. The weekly 50, again, providing you a clear ceiling that you have not been able to defeat at all, and I don't expect that to be defeated. That's 1857. You're at 1805. The Russell can clearly pump $50. It's moved to over $100 on some of these CPI bars. So you can come back up, and that would be a beautiful double top from that point, okay? Come back up, back test that 50, fail, start moving back down. This is a weekly time frame. This is your 300 down here and your 200, 233. Just a big box of resistance, and look how narrow it's getting. And again, look how close the death cross is on the weekly time frame. Weekly 50, 200. Guys, these markets are going to give up so much value. It's unbelievable. So I'm glad you guys are watching this channel. Again, that's Dante's on the daily. Let's go ahead and look at a daily time frame here, basing out of our Wyckoff structure here. I mentioned I shorted here. It came back down, got only in profit a couple dollars. Went ahead and closed it out because it didn't penetrate the Wyckoff. Alerted the room to that as well, because I think with the CPI rally that my original stop loss still probably could be good here, but you know, why take the risk? We'll just wait until it pumps up. Weekly daily 50s right here rejected you. Your daily 200s at 18.24, only $20, $19 on top of you. So again, see what the CPI rally does, and that's kind of the max area it can get to, in my opinion, like we just talked about. But you know, really looking in this quadrant here for some wicks, and then this is going to start to roll over in a double top type fashion. So you have 1807 is where you're at now, 618, 1831, 707, 1848. I don't anticipate you getting past that 1848, but if you did, 786 at 1863, and your one fib at roughly 1900. Looking at the money flow here, I don't have the money flow on here. Volume momentum is down. Overall volume is down left to right, as you can see. So volume's on, everything's down. Price is rising. That's good. Want price to rise, build us some divergence, and make us a nice top. Let's go ahead and look at the what's it called? The NASDAQ. NASDAQ's just a mess. But the NASDAQ here at the weekly time frame, once again, you had a big wick up, never got to your 200-day moving average, which is above you. You're stuck at your 233. You're roughly at 11,139. Weekly 50s well above you. Obviously not even a target at this point, I don't think, in my opinion. Not even a target. So let's go ahead and move forward, although pay attention to the 50 crossing the 200, because that will be a death cross. Looking at the daily is more realistic here for the NASDAQ. Couldn't get to the weekly 50, okay? But you're on top of this mini-cough structure. You see that? So you're basing for a pivot. And that CPI can provide you the pivot. Come back out and do this, right? This is what you want to see. Maybe get up to that 50. Your 200's way too high. Your 233 is way too high. Let's pull a fib here. From here to here, and see where we get to. So we could get to, what do we got here? 11,223, 11,372. Your 618 is probably your any type of top here, which would get you above the 50. 11,561. Wouldn't anticipate much more than that on the NASDAQ. We'll see. We'll see. But again, it's all going to depend on that number. If that number comes in hot, guys, it's just going to dump. Let's jump to gold. So gold, we've been talking about extensively looking at the 3-day chart, guys. I told you this quadrant, which is right where it is now, is pretty much where gold was going to get to, right? So it could poke its head up. CPI comes in low. If the markets rally, this could rally a little bit more. Looking at the volume on gold, it's low, okay? It's very low. Let me try to boost this up so you can see this. But it's very low, and you got key volume divergence here. You got massive price rise with below average volume this whole way up. Okay, you're building a clear top. However, silver is presenting itself as a better trade to me, but you're building a very clear top, and you're about to get overbought on gold. So all the confluence indicators are flashing, hey, gold short should be incoming, okay? But again, wait for CPI, in my opinion, because if it rallies the markets, the metals are moving with the markets, and you could get an even better price, okay? Because you may get some more upwicks here, and this can clearly go above and stay elevated. So you want to watch it. Look how accurate the market makers MFI is. Nailing the exact candle, right? Nailing that exact candle. So this is a volume weighted RSI. It's a fantastic tool, guys. So we'll see if we can do the same move again with any type of euphoria from a low CPI. But you got key volume divergence here looking at the 3-day chart. Definitely be looking at this for potential trade. But look at silver. Silver's even better. Clear trend line giving you a top, very similar to the S&P, right? Clear trend line giving you a top here. Lower high, lower high, lower high. Did my gold and silver targets this past Friday. If you guys want to watch that video, it's towards the end of the video for 2023. And again, looking at the overbought, bouncing off overbought, and it looks like you're coming up for a double top, which is what we talked about in the silver target video from Friday. So I wouldn't be surprised. This is your first hump. You hit your trend line, you come down, and you come back up. Get that low CPI, watch this come back up, maybe you get some wicks, and then I'm looking, guys, at the dissension with the marketplace. I'm looking for silver to come down to 1588, okay? We went over that mini cycle of the crash and recovery. Watch that Friday video because I go over that pretty in depth, and I should give you the target here, because the target here is if we do top out and start selling off, looking at minimum here of the 1 fib at 1481 for around that same time, the spring equinox, assuming the markets do continue to decline. I would assume the metals are going to move with them because they've been moving with the markets. Just like in the GFC, guys, this is what my prediction is. So 1450, 1481 here on a declination for gold, and 1588 by the spring equinox for silver. And silver is just setting up to be a really, really nice trade, guys. So keep your eye on that, and definitely check out SimpleFX to trade all of these asset classes. All right, guys, I hope you enjoyed the video. Leave your questions, comments, like, subscribe, watch Bitcoin. We should have a juicy move incoming. Really excited. This is going to be fun. It's been dull for a little bit, right? It's going to be fun very, very soon. Volatility brings lots of trading. Take care, everybody. See you next video.